Hello family, and welcome to my screens again. So in today's video we're going to be looking at the United States dollar basket, or the USD basket, and how to trade it. So the United States dollar or USD index or basket, and then how to trade it. All right, so the USD basket, or the DXY, is simply a measure of the value of the United States dollar relative or as compared to a basket of foreign currencies. So on some trading platforms, or on some charting platforms, you can see this DXY being named as USD basket. So it is named so because it is simply a measure of the value of the United States dollar, or the exchange rate of the United States dollar as compared to a basket of different currencies. So when we say a basket of different currencies, we are saying that different currencies that are exchange rates of different currencies compressed together and being compared to the strength of the United States dollar. Now, in as much as it is a basket of currencies, we cannot compress or use all the currencies available or that are being traded in the forex market and compare it to the United States dollar. So what happens is that there are 6 foreign currencies that are being used, or that are being included in the basket. Now, these 6 currencies that have been included in the basket are the euro, the Swiss franc, the Japanese yen, the Canadian dollar, the British pound, as well as the Swedish krona. So the Swedish krona is the currency traded by the Kingdom of Sweden, or in Sweden. Is that okay? So these 6 currencies are the currencies that are included in the basket. They are the currencies that are included in the basket. Now, these currencies are being chosen because they are considered America's most significant trading partners. So America have more of a trading relation with these countries and their individual currencies. That is how come these 6 currencies are being included in the basket, or their exchange rates are the ones that are being chosen and included in the basket. Now, in as much as it is 6 currencies that are being chosen, or 6 foreign currencies that are being chosen, the value of the index is equally a fair indication of the dollar's value in the global market. So let's say when you should analyze the DXY, whatever value that you get is a fair indication, or is going to be applied to all other currencies in the forex market, or in the financial market. So it is not just the index is not just applied to only these currencies, but it is applied to all other currencies in the market too. Now, in as much as it is a basket of different currencies, or 6 different currencies compressed together, each of the currencies have their individual weights, or the percentage of their exchange rates that are being included in the basket. It's just like you having a basket of fruits, all right, different kind of fruits. So let's say you have 6 different kind of fruits. Each fruit will have its quantity, or a number of fruits in the basket, or a number of fruit types in the basket. So similarly, all these 6 currencies that are included in the basket have their individual weights, or have their individual exchange rates that are being included. So the highest so far is the euro. So the euro has a weight of 57.6% of the exchange rates included in the basket, followed by the Japanese yen, or the JPY, which has 13.6% included. Then we have the CAD, which has a 9.1% included. Then we have the Great British Pounds, which has 11.9% included. Then followed by the Swedish krona, as well as the Swiss francs. So these are the individual weights of the currencies, of the 6 currencies that have been included in the DXY, or in the DXY basket. So that is simply you understanding what the USD basket is. So when you should analyze the USD basket, whatever that you get, or whatever direction of the market that you get from your technical analysis, applies to all other currencies. Are we following? It applies to all other currencies. But then you cannot just analyze the index on some trading platforms. You can't analyze the index and trade the index alone. But the knowledge from what would happen on the index can be applied to the various currencies that you trade, especially currencies that has USD as either their base currency or their quote currency. Are we following? For instance, if you should take a currency as USD CAD, USD CAD has USD as the base currency, and CAD as the quote currency. So if you should analyze the DXY, you can just take knowledge from the technical analysis of DXY alone to trade USD CAD. perfectly. You get an entry on the DXY, you can apply it to US CAD and you fall in the right direction. But then how do you apply this knowledge? That becomes a question for us to digest. All right, so just follow through and then let me help you out in this case. So when we come here, if we should analyze the DXY and you get the direction of the DXY is buy, all USD based currencies, that is all currencies that has USD as their base currency, like USD CHF, USD CAD, USD JPY, USD SEK, all these USD based currencies would have a buy, because the direction of DXY is buy. In DXY, the direction of DXY is buy, and in DXY is the strongest currency here. The USD is the strongest currency, that is the base currency. So this, since this is the base currency, the United States dollars index becomes what? A stronger what? Index. Are we following? So it's going to follow the direction that the DXY is following, just following the footprints of what? The DXY. However, if you analyze DXY and the direction, you get the direction to be sell, all USD based currencies are going to sell. You understand? You know that when you should take a forex currency pair, when one currency is selling, the other one is buying. So you take USD CAD, when USD is buying, CAD is selling. You understand? When USD is buying, what? CAD is selling. So in as much as USD is buying and then CAD is selling, same way that applies to what? To the DXY too. Alright, so if the DXY is selling, it means that what? All USD based currencies like USD CHF is going to sell, USD CAD is going to sell, USD JPY is going to sell. It's just following the footprint of the base currency, which is the USD, because the XY here becomes what? A very strong what feature, or it becomes a very strong what? Basket of the USD. So whatever that the USD basket is doing, USD based currencies will do same. But then it is opposite, or it is different when we come to USD quote currencies. So when it comes to USD quote currencies, when the DXY, the direction of the DXY is buy, all USD quote currencies will be selling. All right, mind you, in the USD quote currencies, the USD becomes what? A quote currency. So we have a base currency before the quote currency. It becomes what? A quote currency. So in as much as it becomes the quote currency, if DXY, which is the strongest what of this pair, right, which is the strongest of this pair, is buying, it is going to be what? Pushing what? The base of this currency what? To do the opposite. So if DXY is buying, your USD will be selling, GBP USD will be selling, NZD USD will be selling, gold will be selling. However, if DXY is selling, you realize that what? All these pairs would rather what? Be buying. So this is simply an explanation of what DXY is, and then what? How you can apply it to what? To trading. So I'm going to walk you through the technical analysis with my approach, the technical analysis of what? How to analyze DXY and apply it to your trades. So follow through to the end. Welcome into the chat, guys. So you recall that I said earlier on that when DXY is bullish, or after analyzing DXY and then DXY is bullish, all currency pairs with USD as their base currencies would be bullish, and all currency pairs with USD as their quote currency will be bearish. That is to say, for instance, if you should take this DXY right now, the chart in front of us, you should take the chart in front of us. This is DXY, like you can see here. All right, and then after analyzing, we expect price to be bullish from here. We expect price to be bullish from here. So that is on Friday, June 7, 2024 at 6 a.m. We've seen that price is now what? Resting on a support level, and then we expect price what? To be bullish from just around here. All right, we expect price to be bullish from just around here now, which means that now that we are expecting a bullish move on DXY, if you should be analyzing, or you should want to trade a pair like USD CAD. Now the USD CAD has USD as its base currency, and because it has USD as its base currency, and then DXY is expected to be bullish, USD CAD is expected to be bullish. Likewise, if you take a pair like GBP USD, GBP USD has USD as a quote currency. So in as much as it has USD as a quote currency, it simply means that what, now that the DXY is bullish, we are expecting GBP USD to be bearish. I believe you get it. So let's pay attention to this on the 7th of June 24 at 6 a.m. all right, just around this support level. Like we see, we are expecting price to be bullish, and price was bullish to this level. Now pay attention to these nice curves. All right, pay attention to these nice curves. Then we'll now move on to the USD card pair. All right, now move on to USD card pair, and let's see what happened at that same time. All right, so USD card here we come, USD card here we come, and then we are looking for the date 6th June. All right, we are looking for the date 7th June, rather Friday 7th June. All right, Friday 7th June. So right here on the screen we can see that we have what, Friday 7th June at 6 a.m. all right, 6 a.m. in the morning. Here too we can see that price was resting on a support level. Mind you, just pay attention to it. Price was resting on a support level, and then price is expected to be bullish. It came, it happened. All right, and pay attention to this nice little curve too. You get it? Just look at this nice little curve. You see that the same thing happening here is the same thing that we saw on what, on USD, on DXY. You understand? Which means that as the SY is bullish, all currency pairs with USD as its base currency are expected what, to be bullish. Are we following? Now just let's look at this little dot here. This little dot is around Wednesday 12, around 1 p.m. all right, Wednesday 12, 1 p.m. Let's still go back to the USD card again and let's see what happened there. Sorry, let's still go back to DXY. Right, so DXY here we come. We are looking for our dates back then. All right, you saw that that little dot that we drew on USD card came as bullish. All right, that is on the 12 around what, 1 p.m. and 3 p.m. This also became bullish. The DXY is also bullish. You understand? So you've seen the correlation. Okay, now let's look at USD being a quote currency. So let's take a pair like GBP USD, where USD is now the quote currency and GBP being what, the base currency. So let's now switch on to GBP USD currency pair and see what we can find from there. So we're now in GBP USD currency pair. We have the chart on GBP USD right here. Let's go back to our time. So same thing here. All right, Friday 7th June 6 a.m. Friday 7th June 6 a.m. Remember, on DXY price was on a support level, but here price is at a resistance level. Do we get it? Price is at a resistance level here. Okay, 6 a.m. same time, ranging within that area, and then what we saw, what it's what being what, bearish, while DXY was bullish. Do you get it? DXY was bullish, so GBP USD would be bearish because what, the USD in GBP USD here is now a quote currency. Do we get it? You remember the little dot that we made around? Do you see the nice curve that we saw on the DXY as well as the USD card? That same nice curve happens here. So everything like the DXY basically determines, you know, the move of the other what currency, because what the DXY is a comparison, like I said earlier. All right, it's a comparison of what a calculated what other foreign currency pairs, you know, compressed together and then compared to the USD itself. All right, so you see this nice little curve. We have our nice little curve here. Then at the same time, Wednesday 12 June 24 at 1 p.m. where on the other, the DXY and the USD card, it was bullish. Now we have what we are seeing, what, a bearish move on here. I believe you get it. Yeah, so this is just one of the examples giving us the correlation between DXY and then what, USD base pairs as well as what, USD quote currency pairs. Do you get it? Let's look at another example. All right, let's look at another example. This time around we start from Euro USD. We not start from the DXY itself, but we start from Euro USD. So Euro USD here, and then a very close date. All right, let's look at a very close date. Now the very close date that we're going to be looking at here is on the 5th of what? 5th of September, right? So 5th of September at 4 p.m. 5th of September at 4 p.m. right here. We realized that what? Price was in an uptrend, right? Price was in an uptrend, and then after it got to this level, it became was bullish. So Euro USD was bullish. Now let's go back to the DXY itself and let's see if DXY is going to be bullish or bearish. Remember, the USD here is a quote currency. Are we following? The USD in the Euro USD pair is a quote currency. Hence, since Euro USD is bullish, DXY at this same time is expected what? To be bearish. You get it? So let's move straight forward to that place and see. So DXY, we are moving to DXY here. We are moving to DXY here. Moving to DXY. Very good. DXY 5th September 2024 at 4 p.m. What happened to DXY? DXY is bearish. Do you get it? While it was bullish, while Euro USD was bullish, DXY is bearish. Now look at the way price formed in this area. All right, look at the way price formed in this area. Look at the candlesticks. Okay, I'll put a screenshot of the candlesticks around this zone. I'll put a screenshot of the candlesticks around this zone in the video for you to see. So look at the candlesticks that were formed here. So even before this time, we had what? A bearish candlestick, so a bullish candlestick, a bearish candlestick, then a bearish candlestick. Do you get it? And then when we go back to the Euro USD, so we had bearish, bullish, bearish, bearish. Let's look at the Euro USD itself and see what we will get. So on the Euro USD, we have what? Bullish, bearish, bullish, bullish. All right. So a direct opposite, just a direct opposite. The candlesticks formation is just a direct opposite of what is happening on DXY. Are we following? No wonder Euro, the Euro is taking 57.6% weight, or is carrying 57.6 weight of the total weight of the 6 currencies that are made up of what? The DXY basket. You understand? So in that sense, we can say that what? Euro USD is negatively correlated to the DXY. Which means that if the DXY is bullish, Euro USD is bearish. It's negatively correlated to what? To DXY. Directly, we can even say it is directly opposite, all right, or directly negatively correlated to the DXY. I hope you get it. So that is just one aspect of it. Now, let's now take gold, all right. Don't forget that DXY at this time is bearish. And then what? Euro USD is bullish. Let's look at what will happen on gold too. Don't forget that in gold too we have USD as a quote currency. All right. So in gold too we can see that what at this same time 5th September at 4 p.m. At this same time 5th September at 4 p.m. Gold is what? Bullish. Do you get it? Gold is bullish. So Euro USD was bullish at that time. Right, Euro USD was bullish at that time. Gold was what? Bullish at that time. And gold was even a very nice trade then. All right, it is one of the trades that I took. Gold is even a very nice trade then, because just look at this. It had a first touch, a second touch, and then the third touch is happening on a trend line as well as a support level. Do you get it? Happening on a trend line as well as what? A support level. So it was just a very nice area to even trade from to the next zone. Do you get it? Very nice area to trade from to the next zone. And what? DXY is equally telling us that there would be a sell at that moment on the DXY, or all USD quote currency pairs are going to buy at that time. All right. So you see, the DXY is telling us that what? There is, the DXY is telling us at that instant that what? We have a sell. I believe you get it. So let's take another currency that has USD as a base currency. So let's take USD JPY 5th September. All right. So USD JPY 5th September at 4 p.m. Let's see what we've got. So 5th September USD JPY at 4 p.m. 5th September. Let me just take my vertical line here so that we can see it clearly. At 4 p.m. Okay. So at 4 p.m. right here, USD 5th September. This is All right, so at 3 we want 5th September. 5th September at 4 p.m. 4 p.m. Great. So USD 5th September at 4 p.m. So at this 4 p.m. we are seeing that what USD is selling. Do you understand? So the USD JPY pair is selling at this point, right? So we are seeing what clean sales from this level, clean sales to the downside from this level. That is the same thing that happened on DXY at that time. Clean sales, all right? Clean sales that happened. So that is all about using technical analysis from DXY to trade other USD related pairs. All right, so a quick recap. Let me just make a quick recap for you. We said that what when DXY is bullish, all USD related currencies that has USD as their base currencies will be bullish. Then those that have USD as their quote currencies will be bearish. But if DXY is bearish, all USD related pairs that has USD as their base currencies will be bearish, and those that have USD as their quote currencies will be bullish. So if you like content like this and if you wish to see more, then like this video, subscribe to the channel, comment down below what next you would like me to make a video on so that we can grow together. The subscription is very necessary because if you subscribe, that is when you get videos, that is when you get updates when I release what new videos. In the subsequent days there are going to be technical analysis and what calling out of what trades. So please keep your dials locked on the channel and watch out for more. Thank you. Signing out.